All right, so we're diving into some really fascinating stuff today. Charts, trends, the whole language of the market. We're unlocking those secrets with Martin J. Pring and his book, Technical Analysis Explained.
Yeah, it's like getting a peek behind the curtain, isn't it? Pring really nails it right off the bat. It all starts with understanding trends. It's like taking the market's temperature.
Okay, so is it feeling bullish or, is it getting ready for a downturn? How do we even begin to figure that out?
Well, Pring breaks it down into three main types: short, intermediate, and primary trends. Think of them like waves, right? You got those little ripples, then bigger swells, and then those massive tides that really shift the whole ocean.
So the longer the trend, the more we should pay attention to it.
You got it. Those longer term trends, those primary ones, they're the ones that tend to be more reliable indicators. They're less likely to be thrown off by, some random news event or short-term speculation.
So how does that play out in the real world? Let's say I'm looking at a stock chart. What am I actually looking for?
Well, Pring talks about something called peak and trough analysis. Imagine a stock's price movements, like a mountain range, okay? You've got those peaks, those highs, and those troughs, the lows.
So we're not just looking for a straight shot up. There are going to be ups and downs along the way.
Exactly. It's about understanding those natural rhythms of the market. But here's the thing, just spotting those peaks and troughs, it's not enough.
Okay, so there's more to it.
Absolutely. Pring brings up the concept of retracements, and that's key. Basically, it's how much a price pulls back after it hits a peak or a trough. Let's say a stock climbs to $100 a share, then dips back down to $90. That $10 drop, that's a retracement.
And the size of that retracement, that tells us something about the strength of the trend.
You got it. A small retracement could mean the trend is strong, while a deep retracement might be a warning sign.
Interesting. So we're looking at those retracements to see if the move is likely to continue. But what about those smaller swings within those bigger trends, like those little ups and downs we see along the way?
You're talking about those pro-trend and counter-trend movements within those intermediate trends. Those are important too.
So we can't just focus on the big picture. We also need to pay attention to those smaller moves.
Exactly. Think of it like navigating a winding road. You need to be aware of those curves and turns to stay on track, right?
So how can understanding these counter trends actually help me make better decisions?
Let's say you buy a stock right before a counter-trend dip. You might panic and sell at a loss, right? But if you recognize it as just a temporary pullback within a larger uptrend, you might hold on and even use it as an opportunity to buy more.
That makes a lot of sense. Recognizing those counter trends could help me ride out the dips and capitalize on the larger trend. So we've talked about those bigger primary trends and those smaller intermediate trends. But how does all of this help us understand what the market might do next?
Well, that's where things get even more interesting.
Okay, so we've talked about trends, those broader market movements, but what about those times when it feels like the market's trying to tell us something more specific, like leaving us little clues?
You're talking about chart patterns, right? They're like those recurring stories the market tells us.
Yeah, exactly. So instead of reading tea leaves, we're reading charts, trying to decipher those patterns. But are they really that reliable? I mean, can we really predict the future with these things?
Well, no crystal ball, unfortunately. But Pring really dives into this in Chapter 8. He talks about how these patterns often reflect common investor psychology. It's fascinating, really. You see those same patterns like head and shoulders, double tops, triangles popping up again and again.
So it's like, even though everyone knows about these patterns, they still influence how people behave in the market.
It seems that way, yeah. And what's really cool, Pring talks about something he calls measuring implications, and it's like this. You can actually use the size and shape of a pattern to get a sense of how big a future price move might be.
Whoa, hold on. So you're telling me a stock's destiny might be hidden right there in those lines on a chart?
In a way, yeah. Pring actually gives a great example in the book. There's this chart with a failed reverse head and shoulders pattern. And because it didn't fully form, it suggested a smaller price move than if it had played out, perfectly.
It's like those subtle tells in a poker game that can reveal so much.
Exactly. Now, just like we have those bigger trends and then those smaller trends within them, those pro-trend and counter-trend moves, we often see mini versions of these larger patterns playing out as well.
So we're talking about things like flags, pennants, wedges, those kinds of patterns.
Yep, those are the ones. And these little patterns, they can be really helpful for timing your entries and exits.
Okay, so how do we know when one of these smaller patterns is actually signaling a real move and not just, random noise.
That's where paying attention to volume comes in. And, Pring dedicates a whole chapter to this. Chapter 26, he argues that volume can either confirm or contradict a price move. So if you see a breakout from a pattern, but the volume is weak, it might not be that reliable.
Like a hesitant round of applause, right? Not very convincing. But if the volume is strong,
then you've got real conviction behind that move. And to help us track all the nuances of volume, Pring introduces this really useful indicator called on-balance volume, or OBV for short. It's basically a way to measure the cumulative buying or selling pressure over time.
So it's like a detective noticing footprints at a crime scene. The OBV could be giving us those early clues about a bigger move that's about to happen.
Exactly. Now, we've covered a lot of technical ground here, but we can't forget about the human element driving all of this. And Pring doesn't shy away from it. In chapter 29, he really gets into the psychology of the market, the hopes, the fears, all of it.
Right, because even with all the charts and indicators in the world, it ultimately comes down to human decisions, right?
100%. And, that's where contrarian investing can come into play. Sometimes going against the crowd can be incredibly profitable. Pring actually talks about market letter writers as a contrarian indicator. You know how those guys are always putting out these predictions?
Oh yeah, like when everyone's super bullish, it's probably time to head for the hills.
That's often the case. When everyone's on one side of the boat, things can get a little precarious.
Okay, so we've covered trends, we've explored chart patterns, we even dove into the psychology of it all. But how do we actually put all these pieces together? I imagine it can get kind of overwhelming.
Yeah, it can feel like a lot, especially when you're first starting out. But think of it like this. You wouldn't bake a cake by just throwing all the ingredients in a bowl at once, right? There's an art to combining these tools to building a strategy.
Definitely. I'd much rather have a well-crafted red velvet cake than, a random mix of flour and sugar.
Exactly. And that's where that weight of the evidence approach comes in. It's not about relying on just one indicator or pattern. It's about looking for that confluence of signals. Let's say you spot a stock with a nice uptrend based on that peak and trough analysis we were talking about. Then you notice a bullish flag pattern forming. You check the volume and it's picking up on those upswings. And to top it off, the OBV is trending higher.
So like all signs are pointing to a potential buy signal? But even then, it's not foolproof, right?
No system is perfect, and that's crucial to remember. It's not about predicting the future, it's about understanding those probabilities. Now, remember how we talked about context being so important? Pring brings up this concept called sector rotation in chapter 22. It's like realizing that different parts of the market have their time to shine.
So instead of treating the market like one big entity, it's smarter to pay attention to the individual sectors and how they're performing at different points in the economic cycle.
Exactly. Think about it. During those periods of easy money, low interest rates, you often see those early cycle, more speculative sectors taking the lead. But as the economy matures, interest rates rise, the focus might shift to those later cycle, more stable, earnings-driven sectors.
Oh, that's interesting. So like understanding where we are in that bigger economic cycle can give us clues about which sectors might be poised to outperform. It's like knowing when to plant certain seeds, right? You wouldn't expect watermelon to thrive in winter.
You got it. It all comes down to understanding those connections. It really is like assembling a jigsaw puzzle. Each piece, each concept we've discussed just adds another layer of clarity to the bigger picture.
This has been so eye-opening. But I have to admit, I'm also realizing how much more there is to learn. It's not something you master overnight, is it?
You hit the nail on the head. It's a journey. And the beautiful thing is, the more you apply these concepts, the more you start to see the market through this new lens, You start to notice those subtle cues.
So for someone listening, maybe feeling a little inspired, what's one thing they can do right now to kind of dive into the deep end of technical analysis?
Pick one stock or index you're interested in, just one. Then choose one concept, just one, from what we've discussed today. Maybe it's identifying the trend, maybe it's spotting a basic chart pattern, and then see what insights you glean just from applying that one tool.
Just taking that first step. Who knows where it might lead you? Maybe it sparks a lifelong passion for deciphering charts, or maybe you uncover this hidden talent for technical analysis.
It's a valuable skill set to have, that's for sure.
Well, there you have it. Our deep dive into the incredible world of technical analysis with insights from the one and only Martin J. Pring. Remember, it's not about memorizing every rule. It's about understanding the possibilities, managing those risks, and never losing that curiosity.
Couldn't have said it better myself.
Until next time, happy charting.